Assalamualaikum. For analysis of corporate financial performance, our group choose Top Glove Corporation Berhad and Supermax Corporation Berhad. Our group members is Nik Nur Nadhira binti Nahar, Nurul Najihah binti Muhammad Amran, Siti Aishah binti Hashim, Sahila binti Muhammad Faudzi, and Muhammad Zakwan bin Isro.
Top Glove Corporation Berhad is the world's largest manufacturer of rubber gloves. Top Glove was established in 1991 by Hashim Dr. Lim Vichai, and it was started as only a local business enterprise with one factory and one glove production line, and today has captured 26% of the world market share for rubber gloves. The company has manufacturing operations in Malaysia, Thailand, Vietnam, and China. It also has marketing offices in other countries as well as USA, Germany, and Brazil. Top Glove offers a comprehensive product range which now includes a non-glove segment comprising face masks, dental dams, exercise bands, and household products, fulfilling demands in both the healthcare and non-healthcare segments. Top Glove manufactures a variety of gloves including nitrile, latex, PVC, and others. Gloves are used in medical, surgical operations, food and services, clean rooms, and safety and industry. Supermax Corporation Berhad manufactures latex gloves in Malaysia, and it is the world's second largest producer of latex gloves. Founded in 1987 by Dato' Seri Stanley Tai and his wife Dato' Seri Sheril Khan as a rubber glove trading. They entered the latex glove industry in 1989. The company owns several brands such as Supermax, Orlia, and Max. The company exports its product to the countries around the world such as the United States, the European Union, the Middle East, Asia, and the South Pacific.
Liquidity ratio is a calculation to measure the ability of a company to pay their short-term obligations using their current assets. There are three sub-ratios under liquidity ratio, which are net working capital (NWC) ratio, current ratio (CR), and quick ratio (QR). NWC ratios measure companies' excess fund available after paying their debts and operating expenses. Current ratio measure the company abilities to pay their current liabilities using liquidity fund. Quick ratio measures company ability to pay their short-term obligation without relying on liquid assets. Asset management or activity ratio is a calculation to measure the efficiency of a company in using their asset to generate sales or cash. There are 6 sub-ratios under these ratios, which are account receivable turnover, average collection period, average payment period, inventory turnover, total asset turnover, and fixed asset turnover. Account receivable turnover measures the company ability to collect debt or credit sales from the customer. Average collection period measures the average day taken by the company to collect credit sales. Average payment day measures the average day taken by the company to pay their credit purchases to their supplier. Inventory turnover measure the company ability to use their inventory to generate sales and show the number of times the inventory can be sold in a year. Fixed asset turnover measure the company efficiency in only using fixed asset for producing their products and goods. Total asset inventory measure the company efficiency in using all the resources or total asset to generate sales. Leverage or debt ratio is a calculation to measure the company's level of debt and their ability to fulfill and pay their financial obligation. There are 3 sub-ratios under leverage or debt ratio, which are debt ratio (DR), debt to equity ratio (DER), and time interest earned (TIE). Debt ratio measure the percentage of total asset financed by debt. Debt to equity ratio measure the total debt being utilized relative to the capital by company's owner. Time interest earned measure the company ability to pay their financial interest expenses based on their debt use. Profitability ratio is a calculation to measure the efficiency of a company to generate profits from investment and sales. There are 5 sub-ratios, which are gross profit margin, net profit margin, operating profit margin, return on equity and return on asset. Gross profit margin measure the gross profit or income generated from sale before taking administration expenses into the account. Net profit income measure the net profit generated from the sale after deducting administration expenses, interest expenses and tax expenses. Operating profit margin measure the profit generated from the sale after deducting administration expenses but before deducting tax and interest expenses. Return on asset measure the company ability and efficiency to use all their total asset in generating net profit. Return on equity measure the company ability and efficiency in using their total equity to generate income to their company itself and their shareholder. Market ratio is a calculation to measure the company ability to generate their market value from their investment. There are 3 sub-ratios under market ratio, which are earning per share, dividend per share and dividend yield. Earning per share measure the amount of earning available to their common shareholder and measure the profit generated from each share. Dividend per share measure how much dividend is paid to each share. Dividend yield measure return earned by investor per share from their investment.
We're going to continue with the next slide, which is trend analysis and comparative analysis. So first is liquidity ratio. So from the graph we can see that in 2017, 2018 and 2020, Top Glove is more favorable compared to Supermax. So this shows that Top Glove have the ability to pay their short-term obligation using their current asset compared to Supermax. But in 2019 and 2021, Top Glove is less liquid or unfavorable compared to Supermax. So it showed that in that year, 2019 and 2021, Top Glove is unable to pay their short-term obligation. Next is activity ratio. From the graph, we can see that Top Glove is good at collecting their debt in 2017, 2020 and 2021 compared to Supermax. But their availability of cash is only good at 2019 compared to the Supermax. Next, we will talk about generating the sales. So from the graph, we can see that Top Glove is more efficient to generate sales using fixed asset and inventory only at 2017. But in terms of using all its resources, the Top Glove more efficient from 2017 until 2021 compared to Supermax.
Next, we move to leverage ratio. Leverage ratio have 3, which is debt ratio, debt to equity ratio and time interest earned. For debt ratio, Top Glove is more better compared to Supermax for the year 2017, 2020 and 2021, but unfavorable for the year 2018 and 19. Then, for debt to equity ratio, Top Glove also more better compared to Supermax for the year 2017, 2020 and 2021, but unfavorable for the year 2018 and 19. However, for time interest earned, Top Glove are more better compared to Supermax except for 2019. Next, we move to profitability ratio. As you can see on the graph, it shows Top Glove is less efficient to generate profit at gross profit margin compared to Supermax. Then, for the net profit margin, Top Glove also less efficient in generate net profit except for the year 2017 and 2018. While for operating profit margin, Top Glove only efficient for the year 2017, and for 2018 until 2021, Supermax is more effective in generate profit after reducing operating expense. Next, this slide still a profitability ratio. From the graph above, it shows return on asset for Top Glove is more efficient compared to Supermax in generate net profit using a total asset except for year 2019. For return on equity, Top Glove is efficient to generate net profit using the total equity compared to Supermax except for year 2020. Lastly is market ratio. Market ratio only have one, which is earning per share. From the graph above, it shows earning per share for Top Glove is more better compared to Supermax from 2017 until 2019 and become unfavorable starting 2020.
Firstly, in activity ratio, Top Glove have a position result comparing to Supermax for ARTO, as their analysis shown that for the year 2017, 2020 and 2021 is higher than Supermax, which are 8.12 and 6.06 and 28.89. Next, the shorter the ACP, it will be more favorable, and in this case, Top Glove is more efficient at 2018 and 2019 with 56 and 45 days compared to Supermax. Moreover, Top Glove shown an excellent APP compared to Supermax that looked too long to pay off its credit. Meanwhile, the ITO and FATO for the years 2018 and 2021 for Supermax has a well-balanced inventory for sales and restocking. Last but not least, for overall year from 2017 to 2021, Top Glove TATO is more efficient in leveraging its asset to produce sales compared to Supermax. Furthermore, as to conclude the liquidity ratio, Top Glove generally has higher financial resources to meet all the ability in financial obligation in the year of 2017, 2018 and 2020 compared to Supermax for its NWC, CR and QR. Meanwhile, in the year 2019 and 2021, Supermax reached the higher liquidity than Top Glove, which more likely to be able to pay its short-term bills. Besides, in leverage ratio, Top Glove have a low DR and DER in 2017, 2020 and 2021, which make it better than Supermax, but for 2018 and 2019, Supermax has improved better than Top Glove, who will be more difficult to borrow money with IDR and DER. However, for TIE, Top Glove has a higher ratio than able to meet the company ability to continue its service, better than Supermax for all year asset for 2019. Next, within the profitability ratio, GPM for Supermax is healthier from 2017 to 2021, since the company can generate more profits from its sales compared to Top Glove. Alike from that, Supermax also achieved a better NPM compared to Top Glove, except for the year 2017 and 2018, where Top Glove brings more money in the company than Supermax, which are 9.63%, 10.39%. Thus, for OPM, Supermax have generally more efficient in its operation and is good at turning sales into profit for all years except 2017, where Top Glove is higher with 11.05%. In addition, for ROE, Top Glove is more efficient compared to Supermax in generate net profit using total asset for year 2019, where Supermax reached 6.68%. For ROE, Top Glove is efficient to generate net profit using the total equity compared to Supermax, except for year 2020, which is 28.89%, lower than Supermax that reached 34.5%. The last ratio are market ratio, which can only be concluded by EPS. In the analysis for the year 2017 and to 2019, Top Glove has shown a higher profitability compared to Supermax. However, for years 2020 and 2021, Supermax has a higher EPS compared to Supermax, which are 20.08 and 147.03. In overall of all ratios, Top Glove have a better performance in average in terms of higher financial resources, profitability and ability to pay off current debt obligation. But unfortunately, Supermax still have a lag in managing their financial performance in terms of higher average collection period and low turnover. So I propose that Supermax make changes by accurately invoicing or stating the payment term. That's all from us. Thank you.